In today's episode, we have Larry Lepard. Larry is the owner of the EMA Fund. He's a notorious investor into gold and silver stocks, and one of my favorite people to speak to on what is happening in the global financial system. I want to give a shout out to our channel sponsor, which is Vizsla Silver. So be sure to check out Vizsla Silver for your mining stocks. Now, make sure you hit the like button on this side or this side. Send this out into the YouTube universe. Comment down below. Larry rules right there down below. If you're excited to have Larry on today, let us know what you think of today's episode. And it's good to see you, Larry.
Likewise, Jake. Very good to see you and enjoyable always to be on your show. I'll also note that I own Vizsla Silver. It's a nice holding in my fund. I very much believe in their project. So,
hey, it always makes me look good when I say that, and then someone I interview says, "Hey, I own it." It's happened a couple times, so it's always good news.
It's good stock. I mean, I'm also very bullish on silver, as you know. So.
Right. Yeah. So let me ask you this. Would you have ever imagined, you've been talking about this money printing issue leading to, some maybe some unintended consequences in the future for many years. Yeah. And now the bizarre thing is that the lockdowns and everything that they did, it basically took everything that was happening and it sped up a decade into 12 months. In terms of the dependence on money printing is on a scale never seen before. The amount of people relying on money aid from the government and other people collecting it that just don't want to work again. Did you ever imagine it would get to this position of the amount of people not paying rent, mortgages, this entire thing? It's quite amazing to look at, really.
It really is, Jake. I completely agree with you. No, I mean, I couldn't imagine it happening this way. I mean, I knew the mathematics of the financial system were upside down in terms of debt growth versus GDP growth. I knew that would have to get figured out, reconciled at some point, and we're obviously in the process of doing that. But I mean, did I know we'd have a pandemic and we'd have unemployment? And then if somebody told me in March, all the indices will go on to do record highs, post this pandemic, based on record amounts of money printing. I mean, I think I heard the statistic that like 40% of the money ever created was created in the last year or last 9 months or something. I mean, if anyone said, would that ever happen? I said, no way. That's not going to happen. There's absolutely no way. But of course it has happened. And that's what obviously, informs people in financial markets that you want to be, because of this kind of crazy optionality or crazy asymmetry, you want to try to be on the right side of a trend, and you just don't know how far it's going to go. I mean, I'm sure the people who were buying gold in 1971 at $35, if somebody had come along and said to them, hey, gold's going to be at $800 in 9 years, they'd have said, you're out of your friggin' mind. You think gold's going to go up 22x, in 9 years? That can't happen. Right. And I'm sure just like today, I mean, I sincerely think gold is going to 10, 20, who knows, 50,000 an ounce. But, I've got guys in Toronto who are, mining stock managers and so forth, who were all kind of saying, no, 2000 last summer, that was the top. And that was only because of the pandemic, and they'll get everything back under control. And we're going back to 1500. Well, I'm here to say there's no way we're going back to 1500. We're going to, we're on our way to 1950 through 2000. And of course, I was just on another interview with a fellow talking about it. I mean, at that point, it's really kind of game on, because 1900 was the high for gold in 2011. And then it dipped down to 1,045 at 2015 bottom. And now it's come back up and went through that 1900 last summer in August. And, everyone thinks, all right, well, that was just based on the pandemic. You buy gold, it's a safety trade. It'll come back down. But when we go through that summer high last year, I don't know, it was 2030 on a closed basis, 2080 intraday. We go through that again. I think a lot of people are going to wake up and say, whoa, something's going on here. This isn't just your average gold bull market where we go up to the top of the range, then we go back to the bottom of the range. That's a breakout. That's a breakout from an 11-year high, so, or, 10-year high, I guess. So, things are changing, right? And I wouldn't sit around and predict that, it's going to stop at 21 or 22 or 23. I think we could be at 3,000, 4,000, 5,000 a lot faster than most people think. So, because, and really, as and as I've said in the past on your interviews, just driven by what the policymakers are doing, because everything we talked about in the past, they've exceeded my expectations. I mean, the amount they're spending, I mean, it's unbelievable. And I mean, they're talking universal basic income, and I mean, we can go into the specific numbers, but most of your listeners probably already know those. So
Yeah, even if you take gold out of the equation entirely, when someone makes the argument and they say, it was just a pandemic and now they'll get everything back to normal. I mean, all you have to do is look at the price of lumber, look at the price of copper, look at the effect that shortages have that even make all of those problems worse. Look at even the government's stated information recently on inflation. Look at producer
right.
indexes. And so, what do we make of this movement that we're starting to see for everyday people in inflation, which is something that hasn't happened that much before? Of course, we can look at the 95% decrease in the purchasing power of the dollar over a long period of time, but it hasn't been a super noticeable effect on consumers. But it seems to be here now, and that's a hard thing for them to put the cat back in the bag on, correct?
I completely agree. I mean, we had this enormous deflationary trend from, the 70s were like this. I was in my teens during the 70s. We've had this enormous deflationary trend. Everyone's kind of assumed, as you often do in these things, that the trend is your friend, and they've been right. But boy, this really is putting an exclamation point on the fact that the trend has changed. And sure, lumber's up 300% because of supply constraints, and I heard maybe it had something to do with a tariff on lumber from Canada and so forth. But and those supply constraints will get themselves worked out. But it's so broad spread in so many categories. I mean, it's soybeans, it's rice, it's corn, it's all the basic commodities, and it's even at the labor level because people have gotten paid a lot not to work. Around here you see these signs, for looking for people to work at McDonald's or just anything. I mean, nobody's. I mean, my son works at a company, they can't get people. I mean, nobody could be, and there's a real solution. You can't get people. Well, you up the wages and you'll get people. I mean, people, you pay them 30, 40, $50 an hour, and people show up and they'll do that work. But no, you're right. At minimum wage, 15 or below, I get it. It is hard to get people. And so, and of course, inflation is partly psychology, as we all know. If you're paying more for everything, then and other employers are offering bigger amounts of salary or hourly wage, you say, hey, I can't get by on what I'm making here. You got to either pay me more, or I'm going over there to take a different job. So I think the wheel has turned, or the worm has turned, and we are entering an inflationary environment. How fast, how long, how much of this is supply? Hard to tell. I mean, it'll bounce up and down, but I don't think things are going lower from here. The move has been too large and too dramatic to put it back in the can. And I think that when the Fed officials say it's transitory and they've got tools to deal with it, I think they're bluffing. I really do. I mean, I think they have to say that to defend their system, obviously. And I just think they're bluffing. And the reason I think they're bluffing is that I think that the amounts are too large to put back in the can. Now, they may be able to tamp it down. I mean, the one way they would be able to get things slightly more under control would be, if they were to means test Social Security and try to reduce defense spending. And if the government were to try and reduce its spending and therefore reduce the rate at which it had to monetize the debt, well, then maybe things, they could make an argument that they're not going to have an inflation problem. But from what we've observed so far, they're not taking a lot of steps in that direction. In fact, they appear to be going in the other direction, and quickly. And you kind of, of course, once you open this Pandora's box of giving people money, guess what? Whatever you gave them is not enough. They want more. And we're seeing that, obviously. So it's a very, very big secular change, in my opinion. And, it's going to run for some years. And therefore, I think there's going to be a very big difference of the investment performance of those who get in front of this trend versus those who are late adopters. I mean, the early adopters always seem to do the best because as the trend becomes more and more known, their stuff works more and more. And by stuff, of course, I'm referring to silver and gold mining companies. I mean, they are on a earnings and profitability basis. They are the most. They've got the highest margins and the lowest valuations relative to their earnings of any sector in the gold market, or in the stock market. You can see that in my last quarterly report. I had a chart that showed that, and they stick out like a red light. There's nothing that even comes close. And so, you take that and then you put the tailwind at your back of a government that's kind of running out of control. Boy, I think we got a bunch of good years here in the stuff that I'm in. Now, there'll be bumps. I mean, as there always are. And the pace is never certain. We know that. But I know which side of the bet I want to be on. I want to be on the government's going to print money to try and keep things going side.
Now, when you say inflation is partly psychological, one of my frustrations and kind of one of the reasons I started this channel is because obviously this isn't a new thing, but it's something nobody noticed or maybe nobody cared about before, the government started, going nuts after lockdowns in terms of the size of the money printing. And I feel like I was looked upon as a kook or a kind of crazy person, um, or a conspiracy person, or not living in reality.
Tell me about it.
Whereas today, I don't think intellectually people realize what's happening, but I think more than ever, everybody pretty much can say assuredly that their life is getting more expensive right now.
Yes.
Everyone can say that. They're seeing it in their gas, they're seeing it in their food, they're seeing it in everything. You're seeing it in houses.
Yeah.
And to me, that's interesting to see if inflation continues the way it is, how many people will wake up and what will be the impact on the velocity of currency, on the price of things, on the awakening of inflation, if this trend continues. What do you think about that?
Well, you've already seen some of it. I think the most notable thing is what's going on in the housing market. I never expected this or predicted this, but I think most people listening to this have had experiences where they've heard about people trying to buy entry level housing, and there are bidding wars. And
Yeah.
they're 10 bidders on a $500,000 house or 700, a modest house. I mean, not too modest, but the basic housing market is on fire. And I think part of that is it's kind of a Gresham's law like thing. People are sitting there saying to themselves, I know my rent's going to go up over time. I can borrow at 3% for 30 years. I need a house. I'm going to go buy one. And so, there's, and then of course that becomes self-fulfilling and they all compete for one and that pushes the price up and the price, blah, blah, blah. So, yeah, I mean, I think everybody is seeing that. I refer to this as kind of being what I consider to be a tipping point. Malcolm Gladwell, says that when something's happening in a population of people and kind of 10% of the people figure it out, then very rapidly the balance figured out. You can have a long gestation period. Like you and I 2 years ago, we thought inflation was coming. We, just because of who we are, and I can really relate to that. You think you're a nut. I mean, my wife is very social, and she takes me to a lot of parties in the town we live in, and it's a nice medium to high end town. And she always used to say to me, she said, "Please just don't talk about gold, okay? We need to have friends here. I don't want people to think we're crazy. Just shut up about the gold thing, and talk about the weather, talk about sports, whatever." So I can definitely, and I've been a gold guy for a long time, since 2008. So I can certainly relate to that. And of course now, maybe our day is coming. I mean, like the broken clock, right? We're right every now and then. So it's a case of, I think we're close to that 10% being aware of what you say is going on, what I feel is going on, et cetera. And then they'll become more aware. And as we all know in human activities, what starts off as a little bit of a trend can become a big trend. And I mean, you see Biden saying he wants to help the unions out. So the unions are going to push for wage increases. And of course, wage increases are going to push up the price of goods. So people are going to say, well, I can't make it on this wage. I need more. And, and then the government, people who are hurting and ask money for the government say, hey, the government's got to give me more. And then, even the government CPI numbers, as you and I both know, all of us know, are cooked. But even the cooked numbers went up a huge amount. I mean,
Yeah, right.
right? I mean, they're cooking them and they still went up like 4x what was expected. And of course, that gets factored into the Social Security, which has basically been having very little cost of living adjustment because inflation has been so low. Then the Social Security payments are going to go up, right? And by the way, that increases the deficit. And okay, that's got to be, that's got to be monetized, or that's got to be sold to support that, and that's got to be monetized. And all of these things, quote unquote, make the problem worse, and it kind of becomes a vicious circle, right? And that's what happened in the 70s. I remember it very well. I mean, one of the great ironies of the 70s was that there were times, many years, where you could buy a new car, drive it for a year, and sell it for more than what you bought it for.
Really?
Because the price of the newer version had gone up so much
Wow.
that even have a year of use on it, you could still get more. You follow what I'm saying? I
Yeah,
mean, it was
exactly.
kind of,
It makes sense.
it was kind of like, and so I think that's kind of going to happen here. I mean, the price spiral gets going, and it's very hard to put that back in the can. And obviously back then they solved it with Volcker and very high interest rates, but the economy we've constructed and the leverage we've constructed, that would be a disaster. I mean, I don't think this. I mean, we saw in 2018, Q4 2018, how much the stock market hit when they tried, to kind of tighten things up. And I think I don't think they can tighten things up. So to me, it's all over for me except the crying. We don't know at what rate it's going to go, but we know where this is going. I mean, we know where it's going, at least in my opinion. So
yeah, from the people that many people that I've interviewed, the many, books I've read, it seems like one of the common threads between the stage of, Mike Maloney talks about 7 different stages of the fall of the empire. And I believe the last one is a currency crisis. And for the currency crisis to, truly occur, there basically has to be a mass awakening where they recognize their currency is worthless or just significantly worth less. Right. And it just feels like that's starting to happen, regardless of you're a hardcore leftist or you're a hardcore right person or you're a libertarian in between. It seems like people are starting to go, yeah, things are getting more expensive. And I just wonder what the effect of that is going to be. Sure, you can tamper down the inflation numbers, tamper down the price of gold, but if everybody's starting to realize it, that's when it starts to get interesting, right?
Yeah, Tavi Costa had a great chart on that, the University of Michigan inflation expectations, and they're really starting to go up. And so people are seeing the inflation, expecting more in the future, and that's all it takes, and it becomes self-fulfilling. The law you described as Gresham's law is a guy from the 1500s. He was an economist, and basically when people think that their money is getting worth less and will buy less, they advance purchase goods. If you think your dollar is, and the housing is a great indicator of it, right? If you think your $500,000 house is, the dollars you use to buy the house are depreciating, but the house is a house that you can live in. You're going to need one anyway. You can buy it for $500,000. Oh, by the way, the government will lend you 80% of the cost at 3.25%. Through Fannie Mae. You're going to say to yourself, "Hey, I'm going to buy that house. I know it'll be worth $700 in the future. I'll be paying 3% interest on it, and interest rates are likely to go up." I mean, that's what you see happening, and it's I mean, I see a lot of signs that awareness is taking place, and I don't see the mitigant that takes it back the other way. I don't see what turns that around.
So you don't see them raising rates. I've had some guests suggest that they will.
I see them suggesting it. I mean, I think they're gonna use all the tricks in the book. I mean, they understand, and by that I'm broadly speaking of the Treasury and the Fed. They understand this as well or better than you and I do. Okay, for sure. And they recognize the risks inherent. And so what they're going to do is what they've done, which is at the appropriate points in time, they're going to threaten to tighten. They're going to say inflation is not a problem. They're going to call it transitory. They're going to blame it on COVID and say, but that, COVID will pass. I mean, and what they really are is, they're sitting there, the herd is about to get spooked, and they're sitting there trying to calm the herd down. Oh, no, it's all good. Don't worry about those wolves. They're not really wolves. That's like play wolves. And we got this, we're going to shoot them. It's all good. The herd's sitting there going, I don't know. Those wolves look pretty freaking serious. And by the way, everything I'm buying costs a lot more, even though you tell me it doesn't. And, and like I said, maybe, just maybe I ought to take some of my money and put it over in something that protects me. And that's the house, or even they advance purchase goods that they know they're going to need in the future. I mean, I think we might have done these numbers on my last interview with you. I can't recall, but I use them a lot. I mean, there's a lot of fiat money out there, 400 trillion. bonds, stocks, cash. And there's not a lot of sound money out there: gold, silver, crypto, Bitcoin. And if all of that 400 trillion of fiat, if some piece of that starts to understand that it's getting debased, that it's not buying as much, that it's losing its purchasing power, it's going to go chase the sound stuff. And so, even if it's only 10% of the 400, that's 40 trillion chasing the sound stuff. Gold, the tradable gold's about 4 trillion. Bitcoin used to be a trillion. It's a little less than that now. Tradable silver is hundreds of billions. It's not even that large. And then the gold stocks are about 1 trillion. So let's say there's 6 trillion of what I would call sound money investing. There's real estate too is sound money, but it's different. It's not very liquid. So there's 6 trillion of liquid sound money investment alternatives, and there's 400 trillion of fiat that's being printed like crazy. So if 10% of the 400 says, I want sound stuff, that's 40 trillion chasing 6. That 6 is going to get bigger. It's going to go up because, the stuff, we can't make gold that fast. We can't make silver that fast. There's a cap on the amount of Bitcoin. We make gold and silver mining companies, but, they don't produce for a while, and, drill stories are risky. So what you're going to see is money moving from we're okay in these bonds to, no, we're really not okay in these bonds. 1.67% for 10 years when inflation is clearly running at, 2, 3, 4, 5, 6. Chapman says it's running at 8 or 9, and shadow government says the same thing. They're just going to say, I'm not holding these bonds. There's no way. So then they sell the bonds. That means, okay, they sell to who? Well, whoever buys it. But if there aren't any buyers, right now there aren't that many, particularly not from overseas, the bond price goes down, the interest rate goes up. Well, the Fed's sitting there thinking, well, okay, 1-2% interest rates, we can live with that. But 3, 4, 5, 6, well, we know what happens with that because we've seen how a leveraged system handles higher interest rates. So they're going to be in a position where they're going to have to say, well, okay, if people are selling too many bonds, we'll have to buy them, which means they'll print the money to buy them and put them on their balance sheet. And you're already starting to see this. We saw the Fed balance sheet go from the 3.7 range or whatever to to 7+. Approaching 8, maybe over 8. I haven't looked recently, but and that's just going to get worse. And of course, all that represents new money being printed, right? So,
right. And so then my question is, what happens with pensions when you said something that is interesting, that pensions and all these different types of things, they're tied into the government's printed inflation number. And if that goes up, then these basically more cash needs to be diverted. And we have obviously pensions, but we also have a retirement crisis, as well. And so then my question is, if we get into the weeds, what happens at this point in the details? Do they just, so they have a vested interest in keeping inflation down, not just for psychological phenomena, but for actual nuts and bolts of how much money needs to get allocated to these things. So what happens in an environment like that? Do they do a retirement bailout, do you think, or what do you think would occur at that stage?
That's a great question. And I don't know the answer to it, but you've touched on something that's very important because, let's say people look at us and they say, well, your debt to GDP is 130% or something. All right. So that's not great. It's certainly on the high end. The last time we were there was after World War II. And of course, we did financial repression and had negative real interest rates to get out from underneath that burden. But people look at Japan, they say, well, their debt to GDP is 300. So you guys got plenty of room left. But what they're forgetting is that the actual accrued value of our Medicare, Medicaid, and Social Security obligations is somewhere between 100 and 200 trillion, depending upon whether you believe Kotlikoff or you believe the CBO numbers. But so in reality, our situation is much, much worse than just the stated, government treasury debt against the GDP, because we've created all these obligations. And as Luke Gromen likes to say, you can print money to pay obligations. We can't print healthcare services. You need nurses and doctors, there are only so many of them. And so, I don't know how it's going to shake out and who's going to get sacrificed. Part of this is also caused by the demographics. I'm 63. I'm the baby boom generation, and we're all the baby boomers retiring, And, it's going to place an enormous burden on your generation, particularly also because when Social Security was set up, they didn't figure people were going to live to be 80 or 90. Most people were dying in their 60s and 70s. And, because my generation is going to hang around a long time, at least the ones who took care of themselves and not work and have a lot of medical expenses because we've eaten shit. So, eating bad shit. So it's quite a problem. I mean, I'll tell you what, I would not, why anyone would want to have any role in any government, federal government, is beyond me. Right?
You've got to be nuts. I mean,
it's nuts because by the time this whole thing's over, it's terribly sad. But by the time this whole thing's over, there are going to be a lot of pissed off people, and rightly so. Because they've been made promises that just can't be delivered on. And this is the kind of stuff that leads to revolutions. And
yeah, the pension's a big eye opener, and it's one that nobody ever talks about. Right. I didn't realize it was in the 100 trillion type of range.
And look, I mean, they're going to have to means test it, and they're going to have to cut some of the stuff back. And
do you think taxes could be at 90% by the end of the decade or something
possible.
crazy?
Who knows? I mean, you want to talk about killing the economy? That will certainly do it. I mean, there's no greater way to kill an economy than to tax the shit out of it. I mean, people just won't. Everything will go underground, and people, nobody will work. I mean, that's Soviet Union kind of stuff. So I don't know. I mean, I don't think we'll be stupid enough to go there. I think more likely what happens is we're going to get really, really rampant inflation. And, I use the metaphor on Twitter a lot. I mean, I think the guys at the Fed are going to become like Baghdad Bob. I mean, they're going to be up there saying, "Oh, don't worry about it. There's no inflation here. Everything's great, and it's going to be just so blatantly obvious. And everybody's going to be working so quickly to get any dollars they get paid. They're going to try and convert them into something that doesn't get debased, gold, silver, Bitcoin, whatever. That, and once you get to the point, I mean, what is a hyperinflation? It's really a collective belief that the money has no value anymore. I mean, that's why all those pesos are laying in the streets in Venezuela, because the money just doesn't have any value anymore. Nobody will accept it. I mean, I could see a day when good, honest business people come in and say, "Well, here, I'll pay you in cash." We don't take that anymore. Give me $3 silver. I'll take that. I mean, it would only be a short period of time, because when we get to that point, the government will do what it really should be doing right now, which is resetting the currency. I mean, Roosevelt did this in 33, and we should be doing it now. The mistake we made here is we got on a fiat currency system and we let the government get out of control. Okay, so let's go back to first principles. First principle is you want to have sound money. The money we've got is manifestly unsound. Okay, we got to solve that. We got to go back to sound money, but nobody in their right mind is going to sell their gold and silver at these prices, and nobody believes that the monetary authorities are going to control the amount of money they're printing. So what do we need to do? We need to do a one-time reset of gold to $50,000 an ounce, and make the dollar exchangeable for gold at $50,000 an ounce, and liberate all the gold in Fort Knox, if it's still there, which I have doubts about. But and that's basically the core of the U.S.'s assets. And at that point in time, the GDP will have huge inflation. GDP will go up massively, and the debts that we have to pay off will be very low relative to GDP. And we'll reset, and it'll be extremely painful for certain people. But on the other side of it, we'll actually have a sound system that we can build upon. And everyone says, "Well, you're wishing for hyperinflation. That's a horrible thing. It would be enormous societal pain." And I don't disagree with that, but I don't see how we, escape that. And I do know that in cases of hyperinflation in the past, when you solve it with a true sound money solution, gold and silver backing, it stops. And things get fixed and things get better, and we'll rebuild on a sound money basis, and it will be a much better world as a result of that. But in the meantime, those people who, a lot of the rich people who have paper, they're not going to be so rich anymore. And a lot of the people who have gold and silver, on a relative basis, they're going to be a lot richer, because they held an asset that held its value through this currency collapse. Because that's really what I think is going on. We've got kind of a slow motion currency collapse, and we're in the first or second inning. As you point out, people are becoming aware. And as I've studied, 10% is the tipping point. I don't know if we're at 5 or 7 or 10 or maybe at 12. I mean, but we're getting, it's good. We know the direction it's going because I've noticed the same thing. I mean, people that never had any interest in financial matters or the rate of inflation are approaching me and asking me about the questions. What's going on? Why, what's all this money printing mean? Are we going to have inflation? Sure seems like we got inflation. Don't we have inflation? And they're starting to sort it out. And it's just going to become clearer and clearer to more and more people. And they're going to inform their decisions based on that. And eventually everyone will be saying, get me out of this dollar. I can't trust this government. I mean, it's really nuts, Jake. I mean, the government collects like $3 trillion a year in taxes, slightly more than that. I mean, we're spending like, $7 trillion a year. I mean, it's, and I mean, this would be like a family that makes 50,000 and is spending, I don't know, 100, or 120 or something. And not only that, but the family's in debt to the tune of, I don't know, a couple million. I mean, if you include the unfunded liabilities. So, I mean, now people will say, well, okay, but you're the leading country in the world. You got the reserve currency and you got all the military. So that makes the dollar sound. Well, yeah, okay, I get all that. And that's historically why we've been able to get away with this for so long. But at some point, some little kid's going to go, hang on a second, this emperor's naked. This is bullshit. I'm not holding these dollars. And you're seeing it. You're seeing smart guys with high profiles have the courage to start to say it. Let me give you two examples. Sam Zell, very wealthy guy in Chicago, big real estate developer, super smart about money, never a gold guy, and says he's deeply concerned about currency debasement and he's buying gold for the first time in his life. He's become a gold bug. Stanley Druckenmiller, one of the most successful hedge fund managers ever, has, expressing more or less the same sentiments. So very smart money people are starting to see it. You're also seeing the guys on the inside, the bond guys, like Larry Summers and Rick Rader at BlackRock and other high-level bond elites saying, well, we got a real problem here. We got to tighten this thing or else we might. I mean, they're aware. They're like, holy shit. This currency, if we don't raise interest rates to deal with this inflation, this currency is going nowhere fast. Like it's going down. So they're aware of the issue too. So what I would say is, what the advantage the little guy has is the little guy can actually control his or her own life and make his or her own choices and just decide that they're going to convert any fiat they've got into sound money alternatives, and or, I would never encourage leverage, heavy leverage, but certainly, having a house versus renting, I think that's a good deal because I think rents will go up with inflation. And once you get a house, you lock it in at, your mortgage rate. And as long as you're not at risk of losing your job or over levered, using leverage to buy something you're going to live in, that's a pretty sensible thing in general. That house will have value. I mean, recall that on the other side of all of this, there will be a reset into the sound currency. There'll be a new dollar or a new something or other, and everything will price based on that. But we won't be in this inflationary spiral anymore because that currency will have a limited supply.
So does the reset not happen until legitimately everyday people that, I personally would categorize as brainwashed start to lose faith in their currency? And when that occurs, that's when the powers that shouldn't be then step in and reset it. Is that what occurs?
I think that's right. I mean, that's certainly the base case. When the money velocity takes off and the inflation is so obvious and people are selling bonds like crazy and buying real assets, Gresham's law is in full-fledged, movement. Yes, at that point, the reset is not far away. But one thing I would add is there's some chance that somebody who's intelligent inside the government, if there is such a person, recognizes this.
You're already wrong. You said somebody was intelligent inside the government.
I know. That's my point. I know it's a little bit of a stretch, but I mean, I think the Pentagon actually the military guys probably get this better than most. And they recognize it's a national security threat if we go bankrupt. And, somebody, and in fact, so I thought they were putting Judy Shelton on the Fed board because she gets this, totally, completely. And my sense is that Trump was trying to get her on the Fed board because somebody had tapped his shoulder and said, look, we need a sound money person on the Fed board because we're going to have a currency crisis here. But apparently that hadn't happened, or the senators didn't listen and they didn't put her on the Fed board. But, what you'd like to think is that before we get to full-fledged hyperinflation, somebody says, folks, we got a real currency crisis here, and this is going to be painful, but this has happened in the past. Roosevelt did it. We're going to do a reset. We're going to do a currency reset, and we're going to return to sound money. That's what should happen. And that would clearly create pain, but it would allow it to be, I think, distributed on a fairer basis than if we just go to outright hyperinflation. My belief is we probably will go to hyperinflation, because I share your view that there's nobody intelligent in the government. But I could be wrong. I mean, I don't think any of us really know how this will play out. There's also the issue of time frame. I mean, this could happen tomorrow. This could happen in 2030. I can't see it getting dragged out more than another 6 or 7 years. And I think that's on the outside. I actually think most of this will be over by 2023. We're now in the acceleration phase of the inflation. And if you look at prior hyperinflations, Weimar, Venezuela, et cetera, once you get to a certain point and the acceleration is really taking place, it's very hard to go back. Very hard. And it plays itself out pretty quickly.
Yeah, and that's why I, asked a lot about, your views on the psychological phenomena, because it seems like that's the next step to get that necessary money velocity. You've talked about it as Gresham's law. And so essentially what you're saying is Gresham's law is the process where more people wake up, and instead of keeping $2,000 or $200,000 in their bank account, they move it into something else.
Yes, that's exactly right. And that's what's going on. I mean, look, you see it in a lot of the other places you see it. I mean, I find this fascinating. I own a ton of them. Look at the silver eagle, American silver eagles. I mean, these things, the spot prices, and this goes to the fake markets, but the spot price of silver is, $26 or something, right? Silver eagles are trading at, 60% premiums to that. So, I mean, that's just supply and demand. Now, some of it's because the Treasury's not making them fast enough. And they claim it's a COVID issue. All right, fine. But the point is, the things which are going to hold their value are going to go up in price very substantially. Or said another way, honestly, the silver coin is just a silver coin. It's not changing. What's changing is that the dollar doesn't have as much value to buy it. So it takes more of them. Another way of saying this is the dollar is going down in its purchasing power. And the reason for that is that the government can't stop creating dollars. I mean, what's amazing to me is that a 5-year-old gets this. I mean, it's, if you have a monopoly game and somebody can print the currency, pretty soon each currency unit's not worth as much. I mean, this is obvious to anybody. And yet it's not obvious to Paul Krugman, and it's not obvious to, Stephanie Kelton.
Here's what I think. It's going to become obvious to everyone, even if they don't want to intellectually believe it, because it's in front of everyone's face. I mean, imagine if your average person's paying $6 or $7 for gas. They're not going to be able to even use their car to go anywhere, your average person on a fixed salary. So I think we're getting very close to that. Now, I want to wrap up with this. David Morgan says, obviously notorious silver and gold researcher and analyst. He says that 90% of the move comes in the last 10% of the time. Now, we've talked quite a bit about the psychological phenomena, and it's like people don't want to give up on the reality that everything's fine. But then once it happens, then the movement occurs quickly. And to me, this kind of exemplifies this whole 90% of the returns in the last 10% of the time. Now, you've been in this industry for a long time. I was hoping you could kind of speak on that.
Absolutely. I think David's brilliant. And I think he's correct. I think if you look at all of these instances, that's right. I mean, the hyperinflation gets triggered when the majority of the people in a society conclude that there is no way they will ever stop the printing. And at that point in time, it's literally like you're in a theater and somebody's yelled fire and there is smoke. And now half the people smell the smoke and they know the printing is never going to stop. And they think to them, and they can see half the people are clueless. They're like, huh? What's going on? I don't know. It's all fine. Or they're listening to the authorities say, no, there's no smoke. It's okay. The other half are like, no, shit, there's smoke. This is bad. I got to get out of here right now or I'm going to lose all my wealth. And it's a rush for the exits. And yes, it is. I mean, if you look at a good example of this, I mean, two examples. One, Weimar, you can go back and look at the charts on that. But two, the 70s example. I mean, gold started off in the 70s at 35. It ran up to 200-ish in the mid 70s. It corrected back down to 100, and then it stayed at 100 to 3, 400 into 76 or 7. I don't have my exact dates right. You can look at a chart. I mean, I'm not misstating. I'm just doing it from memory. But the point is, at the end, it went from 300 to 800 in a matter of very small amount of time, probably the 10 or 15% that David is talking about. And that's right. I mean, there's going to be a point, there's going to be a switching point at which everyone starts to realize, oh my God. And that's where, it really hurts to be everyone's trying to get out of the theater. The exits are only a certain size, and it hurts to be the last one out. You might be breathing smoke. And so people are going to run for this. And I think we opened the conversation. I said, when we get in, to me, this is going to be game on when gold takes out 2100, let's say, because right now everyone's still kind of listening to the authorities. The authorities are saying, stay calm, herd, it's all good, it's transitory, we got tools, and most everyone's believing them. Okay, I mean, you and I don't, but most people do. And it's going to go through the last high of 1900, then the 2011 high of 1900, then through the 2020 high of call it 2030 on a closed basis, and it's going to really start to run, and more of the herd are going to say, whoa, hang on a second, they said they have this under control, but this price is at a record high. And you're going to start seeing, that's the other thing, is you're going to see acceleration of the price. I mean, today, a big gold up day. Well, we had one at the bottom in March of 2020 where gold was up $100 in one day, but that was incredibly rare. And that was on QE Infinity Forever. Generally speaking, a big gold up day is 20 or 30 bucks. That's going to become small. That's going to become small change. I mean, we're going to have some $100 and $200 a day up days in gold. And, when we get into the crossing of this threshold, and people, it's going to be like, I mean, think of how when Bitcoin went from 10,000 to 60,000, think of how that kind of woke people up to what was going on with Bitcoin, right? And you got a real price chase going on, right? Well, that's going to happen to gold. That's going to happen to gold. And everyone knows that gold's a substitute for the dollar. And by the way, then they'll probably attack it at some point. We'll have a very severe correction. We might go to 2,500. They might attack it back down to 2,000. The authorities say, well, we're going to tax gold and whatever it might be. And, so you've got to prepare for volatility here. Everyone in this trade has to prepare for volatility. There were guys in Weimar who had it right, who got wiped out because they were leveraged. And on these corrections, I mean, we are talking about a change in the global reserve currency. This is the kind of thing that happens once every 100 years, if that. And so, you think a change of that magnitude isn't going to be volatile? I mean, it's going to be really, really volatile. And that's why I actually recommend you hold coins above everything else, because you won't be tempted to trade them. And they can't get taken away from you. I mean, let's say you own gold or gold stocks in a brokerage account. What if the brokerage account fails? Because the whole economy is going south. And gas stations are saying, I'm not selling you my gas for dollars anymore. I'll give you a fill up of your tank, but it's a Silver Eagle. I mean, a gas station owner could do that legally. I mean, there's no law that says they have to sell it in dollars, and that kind of thing could happen. And yeah, I mean, I think $6 or $7 ought to do it. I mean, I remember 2011 where it was kind of happening, and then they did a lot of stuff to put it back in the can. And by the way, that's another part of why people don't believe me and they're fearful of this whole thing. It's like, yeah, Larry, you were saying this in 2008. And you were right up until 2011, but then they got it all back in the can again. And people are thinking, well, this time they're going to get it back in the can. Well, maybe, but it's a lot bigger problem this time. It's at a global sovereign level. I mean, in 2008, it was a U.S. housing market level, a big market, granted, but it wasn't global, and it wasn't at the sovereign level, and it wasn't about trust in government. And when Jay Powell is up there saying that inflation's transitory, and inflation expectations are well grounded, and in fact, people are paying $7 for gasoline, they're going to look at him and say, you're Baghdad Bob, dude. We don't believe you. You're full of shit. That's fine, Jay. Okay, great. Yeah, thank you. Give me that gold. Give me that silver. And then, of course, around that, there's a lot of fake gold and silver, as I'm sure David Morgan pointed out to you. There's a lot of paper claims that aren't real. So we think that's a big game of musical chairs, right? So if there are 100 claims on every ounce of gold that really exists and 99 people don't have it, they just have a claim, and they say, give me the real gold, please. Thank you very much. Then the COMEX and the CME are going to default. And that's going to be another, oh my God, I can't even get the gold I thought I had. Well, I got to buy it somewhere else. I mean, it's, Jake, in my opinion, it's going to be the largest transfer of wealth in the history of the world. And it's going to be written about for 1,000 years. And our grandkids are going to say, how the hell could those people have been so stupid to think that they could rely on a government to print their way into prosperity and to control the money supply when they have 5,000 years of history that shows that any time that is attempted, it ultimately fails, whether it be Weimar, Venezuela. Now admittedly, this time it's at a global, reserve currency level, but hell, in Rome, it was at a global reserve currency level, and they took the denarius down to basically zero silver content, and then they defaulted and Rome fell. So, it's going to happen. It's going to happen. What we don't know is the slope, but it's coming. It's definitely coming. And, it's a very, very big asymmetric bet. And so, I've said this about a lot of assets, but never more so strongly about gold and silver. Even if you don't have all your assets in gold and silver, and of course, probably nobody should ever do that, although I have pretty much done that. To have a zero allocation to this area is just literally financially insane. And yet, if you go to, your Morgan Stanley broker and tell them you want to buy gold or silver, they try and talk you out of it. And, to not have, 5, 10, 15, 20% of your assets in gold and silver is, in my view, really deeply wrong because of the optionality and the upside here and the protection that it offers you against what we know, what we absolutely know. I mean, unless you really believe government is benevolent and honest, and as you know, I don't believe that, but I suppose some people do. But even if you believe that, I mean, they might screw it up. And so why don't you hedge your bet? Why don't you hedge your bet and own some of this sound money? So.
Absolutely fantastic interview. I know you got a roll. I love talking in depth about psychological phenomena. It happens very slow, and then you can see it's a slow motion move, and then all at once very quickly.
Exactly.
And so
you nailed it. You totally get it. And I hope by doing this, and how many people watch your YouTube channel, Jake?
We're up to as the time of today, about 118,000 subscribers. And since the 12 months we created it, 12 million views.
That's really awesome. I mean, I just hope we reach enough people. I mean, that's my major goal. I mean, I'm fine. Financially, I'm totally fine. I'm not about that anymore. I'm about, I want to see people just get educated and protect themselves, because I think the pain that's coming if you don't, it's going to be meaningful. That's sad, But having said all of that, I didn't build the system, and if we get more, all the people we get educated about this, they will then go do and educate others, and they will do the right thing, and then they will be in a position to help rebuild a fairer society on the other side. Because as I have said, as bad as this transition will be, life will go on. If we don't get into some big stupid shooting war, and kill a bunch of people like they've done in the past. The buildings are there, the people there, the technology is there. The wealth just moves to different hands, and we'll have a sound money system, and it'll be a good world. It'll be, we'll recover. It'll be fine. But, now, which is not to say that there won't be some pain between here and there, because there will be, as you know.
Yeah, for everyone listening, if you enjoyed this episode, please give us a comment down below. Comment down below, Larry rules. Let us know. Say, hey, I enjoyed this episode. I wanted to, do a deep dive into some of the ways this might play itself out. Hopefully this added value to you, gave you some clarity or some interesting things to think about. If so, be sure to hit the like button on this video to send this out to more people. Give us a comment for the YouTube algorithm. Make sure you hit that subscribe and bell notification. YouTube's always changing their algorithm. So make sure you hit the bell notification to get notified for new videos. Right there down below, we're going to have Larry's Twitter right there down below, so you can link up with Larry. If I missed some important things you want to see, give us a comment down below so I can make sure I bring them up with Larry.
Dick, let me just make one other point. I write a newsletter every quarter. You can subscribe to it. It's free. I won't ever spam you. And it's available on my website. So I've got all the past ones. You can go there and read them. So my website is EMA2, Edward Mark Alpha, the number 2.com. So that talks about my fund, my philosophy, and then has links to my newsletters and some past interviews. And those newsletters, I think, have a lot of good data and charts which support what I've been saying, empirically. So it's not just kind of my opinion. So
So
I
we'll link ema2.com right there
yeah,
down below as well.
yeah, I encourage you to have a look at those because this is something I've been doing this for 12 years. I mean, I've been investing for 40 years, but I've been in the sound money trade since 2008, and I'm trying to educate and help people because I want to see them protect themselves and their families, so that on the other side of this, the good people will be able to rebuild a more honest system. So
So give us a comment down below. Share this video on social media if you enjoyed it. And we want to thank Larry for coming on today, and looking forward to having you on again, Larry.
I'd love to do it, Jake. Always enjoy talking to you. You're really, really great voice in this community. So thank you very much.